given to me today, and I request CP Jain to escort our speaker, Pankaj Tiwari sir, and hand over a flower bouquet to him. Yeah. As said, I am privileged to introduce today's speaker, CA Pankaj Tiwari sir, who is all the way coming from Mumbai. He is a qualified chartered accountant in May 2012. Currently involved in audit and assurance services along with consultancy services like due diligence, valuation, etc. But previously worked with BSR and Co. LLP in the financial service segment. Handles audits under various GAAPs, Ind AS, IFRS, US GAAPs, IGAAPs of listed and unlisted companies in India. Specializes in audit of banks, NBFCs, HFCs, and other listed companies such as ICICI, Axis, Citibank, Deutsche Bank, Vijaya Bank, then Vijaya Bank, and Union Bank of India, GIC Housing Finances. Special invitee to Corporate Laws and Corporate Governance Committee of ICAI, member of AASB Studies Group on Guidance Note on Bank Audits, expert panel of AASB on bank audits, Ind AS implementation of WIRC of ICAI, corporate and allied law committees of BCAS. Contributions, he has made contributions in publications of journals, publication on significant audit matters by Center of Audit Quality, WIC publication on bank audits, BCAC Journal, Global Development in Financial Reporting, regular speaker on various topics at various forms of ICI and other professional institutions like BCAS, CTS. So we introduce you before you all for the speaker today, and hope he is standing in between your lunch and this. So I think so he will do the justice for you so that you are all alert for it. Thank you all.
Good afternoon to everybody, and thank you Bangalore branch for inviting me to speak on this topic, which is IRAC norm. Uh, After listening to the chief guest in the morning, I was really thinking what I'm going to speak about, because when he said that I have taken care about all the NPAs at the bank, and now you people need not worry about giving the MOCs at the branches and all that. So I was worried that then this topic becomes irrelevant for the audience, because the person who is helm of the affairs is saying that there is no problem at the bank. But let me tell you, my friend, fortunately or unfortunately, for most of you all, this is a one-time event in the year where we get involved in the bank audits. But for me, it's a daily exercise. As part of the engagement, I am continuously engaged with the banks as part of the audit. So what I will do is that, and what the chief guest in the morning spoke about, the expectation of the regulator and the expectation of the banker is now far, far different as compared to the earlier times. What do you mean by this? The meaning is that, till today, and whenever I speak to any forum, this is the 12th session in a month which I'm taking at a Bangalore, and hopefully the last session. Wherever I speak, anybody in the audience, I get that feeling that still we are stuck up to the fact by comparing the drawing power computation with the stock statement. His DP is not correct, so he should get downgraded to NPA. These are old NPAs. I call them as traditional NPAs. And that is what my friend in the morning from Canara Bank was talking about. Today what we will be discussing is all non-traditional NPAs. Be it a restructuring of advances, which is one of the focus area of the RBI, and I'll show you those instances. The second is the system issues which he spoke about, that as an auditor, now we are expected to identify the system issues. It is very good to hear, that you should identify the system issue. How should I identify the system issue? You give me 7 days at a branch, 3 days take to get the Finacle login. And you expect me to give the system issues by end of the 7th day. How do you, do it? So what I'm going to do, my presentation or the whole discussion, whatever 1 hour I have, is divided into 2 parts. Absolutely, sir. The presentation is divided into two parts. One, which I feel is very relevant for all of us, some important aspect other than the IRAC norm, which are relevant for the bank audit of 23-24, where I would, approximately spend 25% of my time, and 75% of my time I'll be spending on discussing some of the practical issues, because as an auditor I raise all these issues in the quarterly audits, whichever bank I do. So I have picked up all the issues in last 1 or 2 years, post automation, post resolving the traditional issues in the banks. These are the issues which we'll be focusing upon, and let me assure you, when you will move out for the lunch, you will have 2 to 3 issues which will go to the bank which they have not expected. Just focus on the presentation for 1 hour, whatever I'm talking about. So let's move to the presentation, my friend. Sorry, I can't move, right? I can't come down. Or can I come down? Yeah. I really like the interaction with the audience rather than just standing from the podium, sorry. This is what he spoke about, my friend. This is exactly what he spoke about in the morning. This is a cricket season. Cricket fans can understand this. I'm not sure. This is a signature, or this is a sign for a new ball. Whenever in the cricket a new ball gets introduced, this is the sign which comes on the screen. And that is the strategy which the team has to decide, that how do you play with the new ball. Today, in current situation, we are exactly at this level. We cannot have this traditional area of an NPA in the current audit. So what I will be speaking about, the whole presentation will be, discussing about these matters only. I'll move to the next slide. Recent events and action of the RBI, I think a lot have been spoken about. I don't want to get into it again. One thing I want to highlight to all of you, and straight away moving to the topic. Can you just put it? Yeah. Hello, am I audible? Yeah, thanks you so much. So, before you get on any audit or before you get on any assignment, the one thing which we should be very clear, that what are the challenges in that assignment. We go on the branch for 5 days, 6 days, 7 days. If you're going to do the entire audit of that branch, I think you will end up in the next year auditing again. It's important for us to decide the focus area of the bank audit, or what should be the focus area for those 10 days, 7 days, 8 days, whatever I get. So I have listed down some of the challenges which are there in the bank audit in today's situation. One challenge which is spoken about all the time is compliance with the IRAC norm. Sorry, can you just tell me which is the pointer? If it's not there. Yeah, okay. It's white, that's why it's not coming. Oh, okay, fine, no. So one of the issue which is there in the banks, and be careful, analyze, is stabilization of IRAC 2.0. Why I'm calling this as an IRAC 2.0, my friend? Because this journey started in September 2020, and people who are doing the audit, how many of you have done the audit in the last year? Just raise your hands. Oh, very good, a lot of courageous people in the audience. This season started since 2020. Then there was a circular issued by RBI in November 21, and all of these circular have completely changed the way the IRAC norms were there. And that is why I call as IRAC 2.0. This is not the IRAC 1.0 where you had normal 90 days DPD norms. You still have, and we will look at some of those aspects, that why do I call this as IRAC 2.0. That is one area where the banks have still not been able to stabilize their system, and we will talk about those areas. Just be focused on this IRAC 2.0 issues which are there. The second is monitoring pool of restructured accounts. This is one area, my friend, which is completely missed from the bank audit. You will tell me, Pankaj, these areas are not covered under the audit. We get smaller branches where this restructuring are not there. No, not at all. You have COVID restructuring, you have MSME restructuring, which are there at the branches. MSME restructuring, which are less than 25 crore, are there at the branches. And as an auditor, I should be aware about when these accounts get upgraded to a standard category, when these accounts should satisfy the terms and conditions to get upgraded to a standard category. So please, my sincere request to all of you, if you are doing a branch which has a restructured account,
please pay a special attention to it. And I'll tell you where you have to pay special attention. I'm not telling you that, okay, identify those borrower, look at them, what they're doing and all that. No. We have to look from how does it impact my asset classification primarily. And third, he spoke about RAM. He said RAM, I'm terming it as a RAM, which is nothing but your retail, agri and MSME industries. Retail loan portfolio is one portfolio, my friend, where not only the bankers, but even the RBI is monitoring it very carefully. So if you are doing a branch which is a retail oriented branch, your job will be tougher this year. And you will say, Pankaj, you're scaring us. No, not at all. The tremendous growth in the NIM of the banks and in the profit of the banks is coming from two segments. One is reversal of the corporate loan provision which was created earlier because of the write-offs and recovery. Second is coming from the fee and interest income of these retail loans. And then, when a bank is driven by the target to maintain the NIM or to maintain an income level, there are issues in the underwriting. Sometimes they will underwrite certain portfolios or underwrite certain loans which may not be fitting the criteria which should have been as per the policy. Loans. You people are like, if the borrower is closing the loan, the branch manager will say, okay, you come tomorrow, you come day after tomorrow to collect the original documents. Right? When you close the loan, they call you 10 times and they don't give you the documents. And then the customer has to face a lot of difficulty. The second circular which was issued by the RBI on September 13, 2020-23 addresses this issue. And I'll tell you how it is connected with the branch audit. This issue is what, if you close a particular loan, a housing loan, etc., as a bank, they have to return the documents within 30 days to the borrower. And what if they don't return? What do you think? Hey, what if they don't return? What will happen? There's a penalty which has to be paid by the bank to the borrowers. How much is the penalty? 5,000 rupees per day of a delay by the bank to the customers. So you'll ask me, Pankaj, what should I do in these cases? Why should I look at these? This is not a part of bank audit or something like that. And if it is, where should I report it if I find any non-compliances? I'll address both the question. As a branch auditor, it is all the time our responsibility to ensure that the bank is in compliance with the RBI circular. And this is one of the RBI circular. So as an auditor, and this is where the RBI expect us to look at it. How the bank is complying with the new circular or the new guidelines. Whether the bank is complying or not complying. If they are not complying, then we should highlight these issues. So what should I do in these cases? Go to the branch on the day one. Day one, ask them whatever accounts you have closed. The loan accounts mainly from the housing loan perspective because there only the security documents will come into play. Ask the list for January and February because the March is still the 30 days have not expired. So he has a time. Look at how many documents are pending to be returned by the bank. Now there could be two possible, and by the way, every bank has a practice of maintaining a register with them. Wherever they take the signature when they hand over the documents to the customer. So look at that register. How many customers have not collected the documents? There could be two issues or two possibilities. One, the bank is in fault because the bank has not got the documents, so if they have not returned it. Second, the bank has got the documents, but the customer has not come back. Many times, customer says, I'm not available, I'm outside, whatever it could be the reason. The penalty is applicable when the bank is at fault and not when customer is not coming to collect the document. Sorry? Wherever the documents are kept, sir, there is only and only at a branch level these documents are handed over. Because your loan is with the branch. And the person who will be handing over these documents need to take the appropriate signatures, etc. when they hand over the document. No, that's what I'm telling you. If there is a separate audit and your branch is not giving the documents, this will not be applicable to you at all. If you are doing an audit of a branch which is handing over the documents to the customer, this will be applicable to you. If you are auditor of that branch, RAPC branch, then it becomes my responsibility to look at this circular, the implementation of the circular. So, and if you find any lapses in the circular, in LFAR, Nilesh will cover in detail, the last clause in the circular which is there, or the LFAR, where you can highlight any other issues which you want to raise it to the management or to the central statutory auditor or to anybody else. That's a clause where you can report it along with the annexures of the file where the documents have not been surrendered. My job was just to bring to your attention that what are the changes which are there in the IRAC, which are there in these circulars basically. So 3 points till now. You have to look at the restructured loan plus the retail loans. You have to look at these two circulars which are issued by the RBI and IRAC 2.2, 2.0 stabilization. Rest of the circular are not very much relevant from the branch auditor perspective. It is relevant from the central stat audit perspective. Okay, IRAC norm 2013 versus 2022, there is no change at all. One change which I will discuss with you all. And this is the circular. So 1st April 2020-23 is the master circular which is issued by the RBI, which one has to look at it whenever they are going to do the audit. A very critical and important point I want to highlight to you all. Recently, since last 3 months, okay, just to clarify, some of the slides may not be there in the booklet which has been given to you all. So please bear with me, this slide will come to you all. I assure you that. So don't look at the book, just look at here and look at me. That's it. Pay attention, you will get to know everything. As per the RBI, if you look at last 6 months penalty orders, there are issues and instances which are related to the branches where they have levied the penalty. And it is important for us to be aware about that which are the area where the RBI is levying the penalty on the banks. Can I look at it during my audit? Because that's the area where these banks might have certain lapses involved. Look at this area, I will highlight some of the area, you can look at other area. One area is senior citizen savings schemes. The RBI has identified in certain banks, and let me tell you, these are all repeated observations. It is not only in one bank. This has happened at least in 3 to 4 banks. Those are the observations, I have put it on the slide. Interest on senior citizen savings schemes. You will ask me, Pankaj, do we audit deposit also as a part of branch audit? Of course, yes, right? Of course, it is given as a last day priority. Senior citizen deposit schemes, the RBI has identified that in certain cases, the interest rate was given as per the normal TD rate. So because they have to be paid higher rate of interest on senior citizen savings scheme deposits, but they were paid at a lower rate of interest. What should I do in these cases? Look at the samples. Pick up 1 or 2 samples, look at it, what is the rate which have been offered to them. If they are in line with the the disclosure or the what has been published rate, it is well and good. I am not saying, my friend, that in all these, whatever bank you audit will be wrong. I am just saying that these are the checks which as an independent auditor we can do also at our end. The next is, I think next one is clarified, that sanctioning gold loan beyond 75% of the LTV. I mean, gold loan KCC is all of your favorite area, so I am very sure you might be checking it. There, some of the instances they have identified where sanctions were beyond 75% of the LTV, which is not in line with the RBI circular basically. Multiple custody, many a times you will see that one PAN having 4 to 5 custodies of in a particular bank or in a particular branch. The RBI has levied penalty on that aspect also. Another did not pay interest rate specifically as per the scheduled interest rate. In all the banks you have certain, the deposit rates are identified. If you place for 90 days, if you place for 160 days, 360, etc. So RBI has identified that in certain instances you have not paid the the interest as per the schedule basically. Failed to benchmark. Oh, the third last point is very critical. And I want you all pick up this point. This is one of the largest private bank in India. This issue was identified and they had levied the penalty on it. This is all available in public domain. I am not sharing some secrets with you, by the way. What they were doing, let's suppose you are doing a disbursement of a loan and there is a under construction property. Normally what happens in some of the banks, these disbursements are done through DDs. the DD is made and they are given to the borrower to give it to the builder or whomever they are purchasing this property. The bank was charging the interest from the date they have created the DD in the system. However, the actual date of disbursement was completely different. It was after 2 months, 3 months, etc. The RBI has pointed out that this is non-compliance to interest rate on advances circular, where you can charge the interest only from the date of disbursement. This money is lying with you. How can you charge an interest to the customer basically? So please look at this area. This is there in most of the bank, let me tell you. And this is very recent penalty order. If you Google it, you will get it also. So my friend, these are certain areas which as an auditor, I can look at it other than advances, by the way, other than NPA classification. One area which one more you need to look at it, rollover of WCDL facility. And this has been a continuous observation by the RBI in case of rollover of WCDL. Rollover of WCDL is not allowed if the borrower is under financial difficulty. If the borrower is under financial difficulty, you will ask me, Pankaj, how should I establish a borrower under financial difficulty? Analyze his last 2 to 3 years financial statement, analyze his repayment track record, you will come to know whether he is in financial difficulty or no. Operating losses, debt to equity worsening, current ratio not in good terms, etc., etc. The banks have been rolling over these WCDL by debiting the CC account. Basically what they do, on the maturity date, the WCDL is debited to the CC account, and on the next day from the same CC account, the WCDL is created. This is not allowed as per RBI. The RBI very clearly in 2021-22 inspection, 22-23 inspection have highlighted that this is not correct. You can't do it, and they have been giving divergence to the banks. And by the way, just to tell you all, this is part of the guidance note. Whatever section B of the guidance note issued by ICAI, appendix 10 gives you all the instances of the divergence identified by the RBI, which as an auditor I should look at it and make sure that this is not there in my bank also. So this could be some of the areas, my friend, which is non-traditional areas, which is not relating to stock computation, drawing powers, so on and so forth. Okay, these are the technical literature which everybody is aware about. I know there is an AI session in the evening to discuss how to use technology, but my sincere request to you, I will just repeat it, this chat PDF. Anybody? Chat PDF? Techie? We are in a technology city. Chat PDF is one of the tool, my friend, wherein you can upload any PDF document and chat with it. For example, you can upload the whole guidance note on bank audit in this chat PDF and ask him the question, what are the steps to verify cash verification? It will read the whole guidance note and it will give the steps. This is chat PDF. What are the, if the interest is received on 1st January 2024, whether the account will get classified as NP on 31st March 2024, type that question, it will read the whole IRAC norm and it will give you the answer. This is chat PDF, use it. So, when people tell me, Pankaj, you people publish 400 pages book, how should I read it? Use this chat PDF. You don't need to read each and every page. And the beauty is that whenever this chat PDF documents are, whenever it will give you the answer, it will give you the reference from where he is picking up. The page number, the para number, or wherever it is picking up. Use this, my friend. This is a beautiful tool available in public domain. It's free. It's free. This is another thing which I wanted to tell you all. There was a lot of discussion on audit documentation and all that. This is a utility which has been published by the Institute of Chartered Accountants of India. If you people are not using it, please use it. Very beautiful utility. It will cover 80% of your documentation issues. And all of you, if not subjected to peer review now, you are subjected to peer review from 1st April 2025 basically. So that means this is the second year of the audit which will get subjected to the peer review whenever you go to get the certificate. Use it. I mean, the videos are available. I don't want to dwell upon it. Okay, coming to my topic. I'm going to discuss 5 to 6 key issues basically which are there with me. And I just want your focus on those 5 to 6 issues. I will be keep on switching between the slides because I want to cover the important topic. And I will go straight away to the first discussion which I wanted to have with you. What is this 8 June 2023 circular, Pankaj, you are talking about? 8 June 2023 circular. Look at here, my friend. Book में कुछ नहीं लिखा है. Nothing is written. I am explaining you what is there in the circular. 8 June 2023 circular was issued by the RBI, wherein lot of banks, my friend, when they were doing one-time settlement in standard accounts. Standard accounts, one-time settlement is possible, maybe because of the business loss, maybe because of the death of the borrower, could be multiple reasons. So what they were doing, they were giving the benefit to these clients. Ki if there is 100 rupees outstanding in that account, the borrower comes to the bank, says that, boss, I will not be able to pay you 100 rupees. Till today I am servicing the 100 rupees with you. But you have to settle the account with me because otherwise it will turn into NPA and then we will get into the legal battle. The bank will evaluate all possibilities that it is better that I should take a legal route to recover this 100. But if they find that the legal route will take more time than what 80 rupees I am getting it today, I might settle the account itself. Now in past, my friend, and this we have been raising to the RBI since time and again, in past all these accounts were treated as a standard account. That means 80 rupees, 100 rupees loan, you are settling at 80 and you are giving time period to pay that 80 rupees also. 5 months, 6 months, whatever you are giving. All these accounts were treated as a standard accounts in the books of the bank. Actually speaking, these are all restructured accounts. Because what have you done? You have given a benefit to the borrower by reducing your principal from 100 to 80 and by giving him 6 months ka period to repay the amount. The RBI has woken up now and they have come and said that, I'll go to the circular quickly. Yeah. RBI has woken up now and they've said that if you are giving one-time settlement to a standard account, this should be treated as a restructured account and this should be downgraded to NPA. So that means in current year, if your branch is having any one-time settlement account which is a standard account, this will be get downgraded to NPA. This is a third question which you have to ask on day one to the branch manager. What are the two questions? First is floating to fixed. Second was closed accounts. And third is the OTS. This is the third question which you have to ask to the branch. So that is one aspect, that if my repayment period is more than 3 months, I have to downgrade this account to standard. The other point which the circular is saying, you can't give loan to that borrower for a period of 12 months. If you have settled the account with the borrower, you can't give him loan for 12 months. This 12 months could be 24, could be 36, but minimum you can't give loan for 12 months at least. And as an auditor, I should be aware about that how this 12 months criteria is getting evaluated. Many times if the bank is there, cust ID basis they will identify it. I will give you one loophole in the banks. Public sector banks, the OTS proposal is done by one department. Recovery, collection, or whichever department will be there. The restructuring flagging is done by a separate department, operation department, or could be any other department. There is a time lag between the information getting passed from one department to the other department. So all the OTS proposal which are getting sanctioned and approved on 29th, 30 and 31st March today may get skipped from classification as a restructured and hence NPA. Are you with me? Are you with me? That's why we have to be very sure that till 31st March, how many OTS proposal are there in the branch which I am auditing. Out of that, how many are NPA? I will keep them aside. How many are standard? Out of which, how many have been tagged as a restructured and NPA, and how many are pending? This could be your first potential MOC if there is a lapse between the two departments. So please look at it, my friend. Two areas from the circular. Okay, by the way, we fought with RBI a lot. This need to be downgraded to restructured NPA only if the repayment period is more than 3 months plus acceptance by the borrower, because you can't do suo motu restructuring. It has to be accepted by the borrower also. So when the approval is in place and it has been accepted by the borrower, that is the date when the NPA will happen. And second question is that, let's suppose Pankaj Tiwari accounts on a proprietary capacity, a CCOD account is coming for OTS. I may have a personal loan also, or I may have a housing loan also. So should I classify all those accounts as an NPA? What is the answer? Yes. I will cover one very crucial point and then I'll come on these issues basically. I'm sorry, I'm jumping a little bit. This issue. Sir, he has said in the morning that he has 100 crore provision, buffer, which he calls as a war chest provision. Just pay attention for 10 minutes on this issue. This could be a biggest issue, and I still call it as a biggest issue in banking industry, which is not done by many public sector bank. आप लोग सब पढ़ लोगे. I'll tell you the issue. A joint loan is been taken by a borrower, a husband and wife, right? Husband and wife is a joint owner, or one of them could be the owner of the property. It's not necessary that both the salaries would be considered for determining the eligibility. Just for operational functionality, I would take both as a borrower and co-borrower, right? If this account turns into an NPA, why it will turn into an NPA? Because neither the husband paid the money, nor the wife paid the money. Both these people have not paid the money, so both these persons are defaulters. In India today, except few private banks and one of the leading public sector bank, the first leading public sector bank, only downgrades the husband as an NPA. Not a gender discrimination, but due to system issues. You can go and check whichever bank you are auditing, and I can challenge them from here. Why it is done? It is because, and people who are familiar with the financial system would know that in all the situation, the primary borrower's custody is at the front. The co-borrower or the co-applicant information is on the back side. It is not on the front side. So when the NPA system runs, it only and only captures the primary borrower as an NPA. However, when this reporting happens to the CIBIL, it happens for both primary and co-borrower. Both are reported as a default in the CIBIL reporting. So my request to you all, please look at this issue and classify all those co-borrower as an NPA. And I will tell you the push which will come from the bank. The first question will come, Pankaj, tell us where it is written in the IRAC norm that I have to downgrade the co-borrower as an NPA. Obvious question. The IRAC norm does not talk about primary and co-borrower. It only talks about borrower. And all these people who have taken a loan have signed the loan agreements. Both primary and co-borrower have signed a loan agreement that I will repay you on a monthly basis the money. But only what happens, because of the system issues, these are not downgraded to NPAs. So in example, if I look at it, let's suppose you have a joint loan, housing loan, with husband and wife are the borrowers. If the joint loan is becoming an NPA, what you do today, the primary borrower has a 50 lakh rupees auto loan. You go and downgrade that, right? What you don't do, the co-borrower, if let's suppose other than credit card, if he has a personal loan, the wife personal loan is not downgraded to NPA in today's situation. Go check in your banks. Not done. So let's absorb the 100 crore which is available with us through giving these kind of MOCs. These are two private sector bank, my friend, which have downgraded or have started downgrading the co-borrower as an NPA. And at least we are so much aware that there is no separate IRAC norm for private banks and public banks. If there is a IRAC norm, it has to be equally applicable to both the banks. So if you look at it, the second line, if you can see, if a loan account of the borrower is classified as an NPA, all the other accounts of the same borrower stroke co-borrowers are also classified as an NPA. So please look at it very carefully. This is one issue which I wanted to highlight to you all, and make sure that this get downgraded. One operational question which I get from the audience, Pankaj, this is okay. How do I identify it? You know, you are saying that, okay, downgrade these account to an NPA and all that. How do I identify it? Very simple, my friend. Housing loan cases, whichever are NPAs, 90% cases are done based on joint loan obligation only. 90% cases. If that 90% cases, you can find one case where the co-borrower has not been downgraded to NPA, it's a system issue. It's not a branch issue. And sir was asking about system issue. He was asking us to give them the system issue. This is the system issue, that your co-borrower accounts are not getting downgraded to NPA. So, okay, you know, just to tell you all that when you go to implement this logic, we also have to be little rational. I'll give you an example. This is an example, please look at it very carefully. A was a primary applicant, B was a co-applicant. They were the primary and co-applicant in housing loan, right? The housing loan became an NPA, right? Who should be classified as an NPA? Both A and B? Till today we were classifying? Till today the banks were classifying A. Now the banks need to classify B also as an NPA. So what will happen to the B's credit card or other loans? Downgrade to NPA. Now look at the situation where A and C, A is also having an auto loan where he is a primary borrower and C is a co-applicant. Now the question is, what to do with the C? And to be very frank, I took 6 months to implement this logic in one bank. What should we do with C? Okay, let's come to the question. C, what should we do? NPA, how many? Oh my God. Anybody else who is saying no, not an NPA? Not an NPA. What could be rational, sir? Anybody agrees with his argument? It's not directly related to the original account. No, C has not become NPA, sir. Here you need to understand one thing, and this is any article sitting here. He will get the logic very carefully. You know why? Because in financial system, the facility does not get tagged as an NPA. The customer gets tagged as an NPA. So when I say housing loan is an NPA, the customer A is an NPA and the customer B is an NPA. Housing loan is not an NPA. Because whenever you go in the system, it's not under housing loan there are two cust IDs. It's under cust ID there are facilities. So I tag cust ID as an NPA. In C's situation, of course this will not get classified as an NPA. Remove the hat of the auditor and put yourself in the C situation and then answer me. It will not, and I'll tell you the rationale behind it, of this exclusion. The rationale is, the C was never reported as a default by the bank to the bureau. Because the auto loan was performing very well. The auto loan was never reported as a default to the CIBIL score or to the bureau. And the second point which the gentleman raised is that, am I responsible to pay the housing loan of A? I'm not. I am signee to the loan agreement of the auto loan. So I will make sure the auto loan is repaid on time. And I will tell you, make B as an NPA in the current year. Forget about C and D next year. You make the B as an NPA in current year and you see the push which will come from the banks. But I request and I pray to all of you, please look at these issues and raise these issues to the banks and downgrade all those co-borrowers as an NPA, my friend. This will have a big impact on the banks whenever they go for the downgrading these accounts. And it has been done. It's not you are the first one who is raising this issue. Show them this, and it is available on public domain of both these banks' website, this information. You can download and take it. Now, yeah. Incorrect. It's absolutely wrong. The PAN should be, if the PAN is the same, then all are treated as one customer. They are not treated as different customer. And if you go back to my areas of penalty, the RBI has levied penalty on this issue itself. And I will give you one more, a logic. In many banks now they have moved to PAN-based identification of an NPA rather than cust ID based classification of an NPA. So if the bank is running on the PAN base, both the accounts will get downgraded as an NPA. But if the bank is running on the cust ID basis, the proprietary account may turn NPA, but not the personal accounts may turn NPA. But as an auditor, I will downgrade all the accounts as an NPA because the individual is one only. They are not different entity. Your question, my answer would have been different if he is a partner and there is a partnership firm, because these are two different legal entities. So, coming to the one more important point, make these co-borrowers an NPA, I am telling you. No. If your bank is running NPA on a PAN base, then you have multiple cust ID, I am okay with it. But if the bank is running on a cust ID basis, it is not correct, sir. See, I would, that is a subjective argument. That if partnership firm is an NPA, all the partners are NPA. That is a subjective argument. The partners in their individual capacity might be repaying the loan. I would just request one thing, since I have a proximity of time, I will cover what I want to communicate, and I am there full day. You can ask me any questions, whatever you have. I am here only in the hall itself. Okay, coming to the second important point, and I am sure this is easy for all of you. Look at this account. This account on 29 November was having DPD of 30 days, 90 days and nil. Okay. In housing loan, he was having 90 days DPD. What we would have done? All account NPA. Okay. There is no trick like co-borrower in these cases. So just answer purely from the IRAC perspective. So if on 29 November, I will downgrade my personal loan, yes or no? Why? Because housing loan became an NPA. So all the loans will become NPA. What the smart branch manager did, 11th March, the borrower repaid the old due in housing loan and it became nil. It became nil DPD. The system has upgraded all the accounts since there is no 90 days DPD in any of the account. Right? Wrong? Right? Anybody else? Wrong. Anybody else? Full overdue? Everybody full overdue? Or anybody saying that housing loan has been paid? Why you have to worry? And this was a confusion in most of the banks. And I am telling you today, if you go to some of the banks, this issue still persists. The RBI in February 2022, and you know why this was an issue, by the way? Why? Because the old RBI circular, which is there up, read it little carefully. If the arrears of interest and principal are paid by the borrower in case of loan account classified as NPA, the account should no longer be treated as NPA and may be classified standard. It is only talking about that NPA account. That means the housing loan account it is talking about. It is not talking about the PL and the auto loan. And the banks were upgrading these accounts once the DPD was becoming zero in housing loan. Now the RBI is saying, And I'm sure I'm repeating and not telling you all for the first time. In case of the borrower having more than one credit facility from a bank, the loan account shall be upgraded from NPA to standard category only upon repayment of entire arrears of interest and principal pertaining to all credit facility. Go check in your banks. There are banks out of 12 which are still, this issue is a system issue, upgrading those auto loan and PL from standard to from NPA to standard, and then downgrading them at head office level, because the SCA raises a question that you can't upgrade these accounts. So these are the system level issues, my friend, which as an auditor I should be identifying. I will go to one more system level issue, negative amortization. Negative amortization. Anybody has heard this concept? No? I'll tell you. And this is where, we have to move from traditional to non-traditional areas. Negative amortization means what, If you have taken 100 rupees loan, in normal situation, this 100 should become 80, 70, 30, 40. When your 100 becomes 110, 120, that is called negative amortization. And this was an issue which was there in the last year at a rampant level because of the increase in the interest rates, where your EMI was not able to service the interest debited in that particular account. Look at this example. You have opening balance of 11 lakh, wherein interest for January month get debited of 10,000. Your EMI is only 9,500 rupees. So that means there is a shortfall of, forget about principal. He is not able to service the interest itself. It becomes 11 lakh 500. Then you have a interest again debited for 9,800. Again there is a recovery. So it becomes 800. You tell me one answer to one question. Will the system classify this account as an NPA if this 800 rupees crosses more than 90 days? I'm not asking should, I'm asking will. I'm asking will the system will classify these accounts as an NPA? They will not. System will only see whether the 3 months EMI has come or no. If the 3 months EMI has come, the system will never consider all these accounts as an NPA. But technically, these all are NPAs. And this was an issue in the last year. I have not changed anything in my presentation. The circular has come from the RBI now. You remember we discussed one circular floating to fixed, applicable from 1st Jan. The circular, and when this circular came, many people called me and asked me, Pankaj, in last year's session you had discussed something about negative amortization. And now the RBI is saying that the negative amortization are banned. What the RBI is saying, okay, by the way, why this was happening? This was happening because the banks were not raising the EMIs, increasing the EMIs. And why they were not increasing the EMI? Because they know they have already sanctioned these loans at 80% debt to income ratio. The moment I increase the EMI, the probability of these accounts turning into NPA is high. So rather than doing all this, let's increase the tenure of these loans. Make them 20 to 30 to 35 years, so on and so forth. So what the RBI is saying now, that yes, you can increase the tenure of the loan, but you should not increase the tenure of the loan in such a way that it results in negative amortization. Can you read? RE. RE means regulated entities. This is applicable to banks and NBFC, everybody by the way. Shall ensure that the elongation of tenure in case of floating rate loan does not result in negative amortization. And my friend, if you find these cases, which is how you will take the loan book, take the outstanding of last year, take the outstanding of the current year. If the outstanding still remains the same or it is more, it is nothing but a case of negative amortization. That means the bank has not reset the EMIs of these cases. And they are still there. And this will get downgraded to NPA because they will cross more than 90 days and the system will not downgrade all these accounts to NPA. So if the bank wants system issue, give them system issue. This is the system issue which we are having in NPA accounts. Coming, okay, little bit on security valuation. Sir spoke, the security valuation is all fine now, we have taken care. And by the way, I do respect that the banks have taken a very conscious calls in some of these accounts or some of these areas. But still there are many areas where the improvement is needed. Look at this example, and this is a live example. We had a loan, basically, a corporate loan, where one of the commercial property was taken as a security. And that commercial property through SurfaceC, I took the possession of that property. I got the value at rupees 100. I appointed some valuer, he told me, okay, this property worth rupees 100. I did 4 auctions of that property. I couldn't fetch 80 rupees also. The base price of the auction was 80. And all 4 auctions failed and I couldn't sell the property at 80. But what the bank is doing? The bank is taking the same valuation report for the purpose of provisioning. They are saying that this is the realizable value of the property. Are they right? Absolutely not. So, you will tell me, Pankaj, very good example, but what you expect me to do? My friend, every branch conducts the auction. It can happen centralized, it can happen through the branches also. Look at the cases, especially DB2 cases, doubtful 2, where there is a gap between secured and unsecured, or DB1 cases also. Look at the properties which are taken in possession and why the bank has not been able to realize the outcome of these properties. What is the reason? If they are marketable property, they can be sold if they are in possession of the bank. If they are not been able to sell these property in the market, that means there is some issue with that property or the value of the property, because based on the valuation report only they determine the base price for the auction. All this requires a re-evaluation. You will ask me, Pankaj, where should I report it or where I require to do this exercise? This is a section of the LFAR, my friend, which says that in respect of non-performing asset, has the branch obtained valuation report from approved valuer, blah, 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 once in 3 years, unless the circumstances warrants a shorter duration. These are the circumstances where you are doing 4 auction of the property, but you are still not able to fetch the money. This is called as the circumstances which warrants a shorter duration. Look at these areas, my friend, because, I'll tell you, now you will not have an issue where, you might have an issue where the branch manager will do some silly mistake, punching wrong number, obtaining, not obtaining the valuation report which is expired more than 3 years. Banks have become very smart in all these areas. But these are the areas where they expect us to look at it and tell them. The second area, many a times I get call from the branch people who do the audit that, Pankaj, this guy is saying, the branch manager, that he has taken a valuation report of plant and machinery and he is continuing with that value of plant and machinery since last 2 years. And he is saying the valuation report is valid for 3 years. See, either the auditor has not read the IRAC norm or the branch manager has read but intentionally misleading the auditor. The 3 years valuation, my friend, is only and only applicable to immovable property. It is not applicable to movable assets. So if the branch is taking the value based on the valuation report for movable asset, it has to be depreciated. You can't get the value which was there 2 years before today also, because all these are depreciable assets. So now I'll summarize it. Sorry, I have less time. I will take 5 minutes and I'll just summarize this issue. I have discussed some of them I not have discussed, I will discuss it right now. In NPA areas for current year, there are 11 points which one should be aware. 11 points only. And these are all non-traditional areas. All non-traditional areas. One, we spoke about the time gap between flagging of OTS in system vis-a-vis coming from the banks. 29, 28, 29, 30, 31st, all the OTS proposal which are getting approved, they all should be downgraded if not done by the branches. Quality of cash credit in CC account, I will give you a little hint of this and then you can go. more than 5 crore account, exposure more than 5 crore, you can't have CC, you can't have current account, right? All these accounts need to be combined and you can have only CCOD accounts now. Every bank and these CCOD accounts runs into the out of order criteria, right? That my credit should be enough to cover the interest debited during the period, etc., etc. Look at it, my friend, in your banks. Let's suppose you are doing a term loan disbursement or you are doing capital expenditure reimbursements. If these amounts are going to the CCOD account, think from this angle. If these amounts of term loan disbursement or any loan disbursements are going to the CCOD accounts, are they getting considered as a credit for that previous 90 days interest debited during the period? I can guarantee you they are getting considered. What will happen? By this credit, I will have an account not getting downgraded to NPA, because the system does not know the difference between a business credit coming in or a bank is crediting the personal loan amount to my account. So as an auditor, and this is again a system issue, because the system is not being able to identify the difference between the two credits which are coming in the CCOD account. So my sincere request to all of you, pick up 3 to 4 CCOD accounts where a fresh funding has been done, analyze the account and look at it whether if I exclude that credit of the loan amount, is the account is going out of order. And I will tell you, there will be accounts, not intentionally. Here the branch manager is not doing all this intentionally. These are system lacunas and you might remove that money which is coming in the CCOD account and the account might turn into an out of order. So that is what I call quality of credit in the cash credit account. What is the quality of the credit which is coming in cash credit account, my friend? Classification of cases of negative amortization, I think we discussed. Co-borrower we discussed. Evergreening through retail accounts. This is also I think we discussed about. Value of security post multiple auction failure we discussed. Existence of security in system but not in possession. I'll just give you one example. Normally what happens whenever the properties are getting sold. Let's suppose you did an auction, the property was sold. You got the proceed and you adjusted it in the outstanding account. Just make sure that they are removed from Finacle also. Because both are independent process. Selling a property is a different thing, removing it from Finacle is a different thing. Pick up 5 to 6 cases or 10 cases, compare the physical papers of the property with the Finacle system. And I'll give you an example. In one of our client, 6 tea estates were sold and none of them were removed from Finacle. Okay, you will tell me what will happen if they are still considering in the Finacle. They will be considered as a secured, but actually the security is not there with the bank, they have been sold these securities. Existence is very important. I think plant and machinery we discussed. Upgradation with the link facility in the overdue status we discussed, those 3 loans, auto, personal and housing, that it should be upgraded only when they recover the entire overdue in all the accounts. This is okay. Only one point. I have covered IRAC norm by the way. These are the system related issues what I wanted to cover. There are many more, but due to time constraint I can't cover all of them. Only one request to all of you. Many of my friends are the branch managers of these public sector bank. You know what they tell me? That Pankaj, you people when I come to do the branch audit, you people are just running after the MOCs. The moment you get the MOC, you are settled. That means I have done my job. And there will be instances, my friend, this branch manager will give you the MOC on the platter. They will debate with you for 3 days and they will accept that, okay, downgrade this account. But in the garb of all this, there might be some bigger issue which might get missed from our eyes. Please request, and this is only one thing which I am telling you from my side. All others were my practical issues. just focus on the audit process, what Sandeep spoke about. MOCs are byproduct of the audit process. They are not the end results. So please look at it and focus upon whatever audit process you are doing, my friend. Okay, this is nothing but a statistics. Since it has come in the public domain, I have put it out to you all. This is a question, I don't know, some statutory branch auditor might have tipped up the MP. And he asked one day in the parliament that tell us how many number of branch auditors and how many number of central statutory auditors are in there in public sector bank. This is the statistics for 3 years. So Bank of India has been a consistent increasing their statutory branch audit. What I understand that their processes are still not centralized. That could be the only reason. The Punjab National Bank is one bank which have been continuously reducing the number of the branch auditor in past. Thank you so much, my friend. Thanks a lot. And I know this is a lunch time, but thank you. Thanks a lot. Thank you.
Thank you, Pankaj ji. May I request CP Jain sir to come and hand over a memento to the speaker. So, as Mr. Pankaj said, audit is a very serious issue and we all have to be on our foots. So please take care of the audits and IRAC norms as he said. Thank you one and all. Let's go. Let's break for the lunch now.